Good morning. So today's more of an educational video, more focused on relative strength. But just to start off with, so we're looking at just my price targets. We're looking at the S&P 500, and at this point, I expect resistance levels to be at 1333, around 1331, and if it breaks through that, the next level for the place to hit is around 1370, which I think that's where the end of any correction that would happen would be. So keep an eye on these levels. So anyway, relative strength. So you think you're going to be a buyer, you think you're going to be a seller. Okay, so what do you sell? Let's talk about an index. There's a concept called relative strength that it's a fancy way of saying how one thing will outperform another. So, for instance, if I take the S&P 500 and then I look at the Russell 2000, it's right there, then I take a look and I say, okay, well, just eyeballing it, it looks like the Russell 2000's underperforming a little bit. So, but that's not good enough. So what we do is we do a ratio chart. So if I say I want to see how the S&P 500 is behaving relative to the Russell 2000, you see that I'm going to do, there's a tab that says ratio chart, and it's just like, you do it like this. So you do SPX, which is the S&P 500, put it in parentheses, divided by RUT, which is Russell 2000. So you get the chart, and you are left with this. Okay, so what are we actually looking at right here? So at this point, we see, okay, so it declines, and it goes up, and then it does all kinds of other weird stuff. So this is the takeaway from this. When the line is moving up, means the S&P is outperforming. And when it's moving down, that means it's underperforming. So if we're looking at this right now, we're saying, okay, yeah, it's been moving up and it's still moving up, so that means the S&P is outperforming. So if presented with only two trading options, if presented only with, you may trade the S&P 500 or the Russell 2000, you would say, okay, if I'm going to buy, I'm going to buy the S&P 500. If I'm going to sell, I'm going to sell the Russell 2000. Okay, so it's all basically resting on one assumption that says that what is underperforming will continue to underperform. And actually, that's not really a new concept. There's actually been many academic studies on that have said that things that outperform will tend to keep outperforming. Just take a look at Apple and see, like, this moves in a pretty long-term trend right here. It's keeping the since it's declining, that means the Russell 2000 was outperforming for a long time. And now right here, it's not so much. And you can still do traditional technical analysis on this. So, like for instance, I could say, okay, we have right here a head and shoulders, and if it breaks that level, that means that the S&P 500 is going to seriously outperform the Russell in the future. So that's how relative strength works, and don't dismiss it. It's probably the most reliable and most useful traditional method of analysis that I've ever used. So when you're looking for things to buy, look for things that are outperforming. So like, say I want to buy Google, so I would do Goog divided by S&P 500, use it as a filter, and I would say, okay, so would I do this? And just load up here, and I'd say, maybe not, because it's declining, or it's flat. It's just as good as the S&P 500, if that. So it's a good way to like filter out trades. Yeah, don't buy underperformers and don't sell outperformers. Simple as that. All right, thanks for watching.